The Bank of England's latest policy decision just out, and as expected, the central bank keeps its quantitative easing programme unchanged at £375 billion, and its benchmark interest rate also unchanged at 0.5%. That was the Reuters poll forecast. And let's get straight out now to David Tinsley. He's Chief UK Economist at BNP Paribas. Well then, David, no surprise?
No surprise on that, but I'm a bit disappointed they didn't do more. I think when the MPC are looking at their latest forecast for growth and inflation, they've both got to be quite a bit lower than they were back at the time of the May inflation report. And I think when they publish those forecasts next week, it will really lay the ground for more easing to come, but it's probably going to be, well, it may not come until the November meeting, but it might come a little bit before that.
And how much are we talking about?
Well, I think they'll do at least another 50 in the November meeting, and I also am expecting them to cut bank rate at that time by 25 basis points. Either one of those policies could be announced a little bit ahead of that, perhaps at the October meeting.
So you're going for 50 billion more QE and a 25 basis point cut in the bank rate.
Yeah, that's right. Yes, I mean they've hanged fire for now, and I think that's basically because the key external risk is the Eurozone, of course. Developments are moving fairly fluidly there. They give themselves a few more months and see how things pan out there, really.
Critics, of course, would say that more QE won't do any good. It's reaching the end of any effectiveness, if it had any, and also cutting the bank rate will do even less good. Should the BOE be focused on other areas, for example, buying corporate bonds?
Well, the usual argument against the idea of buying corporate bonds is there just aren't enough of them. The market's not big enough for the bank to make a significant splash in that market. But yeah, it should be pursuing other measures, and some of the schemes to get credit moving via the banks are most welcome. We can only hope they're of the appropriate size to do the job.
Okay, as you say, the next meeting, well, it's early September. It's about 5 weeks away. How are you advising your clients trade the gilt market and the sterling market between now and then?
Well, I think the view that rate cuts are coming, or a rate cut anyway, is coming, will increasingly take hold. It already is to a large extent. I think really the view on QE is priced in, but really over the next 6 months it's still going to be pretty much a risk-off environment, really. The situation on the Eurozone is probably not going to resolve itself in any hard and fast way. So I think gilts still look a pretty safe bet. The flight to quality into sterling markets is going to continue.
OK, David, thank you very much. Well, let's take a quick look to see what sterling and gilts have done since that BOE announcement a few minutes ago. Let's start with stocks. The FTSE, little change, about 5,740, up around 0.5%. Cable is now 155.60, up around, well, 10 pips. Hardly any move there. And 2- and 10-year yields also little change, under 0.1% for 2-year, and the 10-year yield still hovering around 1.5%. Well, our chart of the day takes a long-term look at euro-dollar as the ECB's latest policy decision looms later today. Credit Suisse technical analyst David Snedden says the single currency's recent recovery may just be the calm before a storm.
I think while you hold 121.75, 121.70 on euro-dollar, you can still suggest that the near-term momentum is higher, but really there's a downtrend around 124 now, which is where we stopped on Friday. And I think if you can get above there, then that opens the door to a deeper recovery on euro-dollar, back up towards 126, maybe even 127.5 again. However, our view is, even if you do see that strength come through, this is a corrective rally on euro-dollar, and we do still expect at some point a big test of the major support, which is 119.85, 118.75.
That's it for now, but plenty more throughout the afternoon, and do keep up with us on Twitter @Reuters Insider. I'm Jamie McGeever. This is Reuters.